That's good. Fantastic. Good morning, everyone, or afternoon, depending on where you're listening in from today. Thank you so much for joining our session on making pricing smarter and easier with AI Price Insights. Really excited to introduce this session today and our guest speaker very shortly. And I just wanted to kick off with a bit of a poll and understand if you're currently working within public practice, which I assume most of you are. There is a poll that's just appeared on the right-hand side of your screen there. And if you could vote on that for me, that would be excellent. There will be a couple more of these polls throughout the session today. So just a bit of practice here for what you are to expect throughout the webinar. Really, really excited to have you all here. It would be excellent if you could please jump in the chat box, which is on the right-hand side of your screen there, I believe, and let us know where you're listening in from today, and that you can in fact hear and see me clearly. And then we'll crack on with the webinar. Amanda from Sydney, Ryan, thank you. From Parramatta, thanks for joining us. Excellent to see you all here. Okay, a couple of housekeeping things just before I introduce our expert guest here. We are recording today's session, so hello to everyone who is watching this in the future. A recording will be automatically sent to you, as well as any resources that we mentioned throughout the session today, including our fixed fee playbook. Please do continue to use the chat as you're all doing. Thanks, Karen and Michelle and Wendy. It's great to see you all there. Janet, Annie, thank you for chiming in there. Please feel free to use the chat and contribute any questions, comments, thoughts. We'd love to keep this as interactive as possible and prefer not to just be talking at you, but getting some feedback from you along the way. For those who aren't familiar with Ignition, and I've seen quite a few existing customers here already, we are focused on transforming your client onboarding, your sales engagement, and your billing and payments processes. We work with over 8,500 firms now at the moment, and it would be great to know just where you're at with Ignition and how much you know about it. There's again another poll on screen. If you already use it within your practice, if it's your first time hearing about it. It looks like there's a few of you where it's your first time hearing about it, so welcome to your first Ignition webinar. If you know a little but you're here to learn more, that's fantastic as well. But yeah, just wanted to get an idea of where you're all up to in your awareness and understanding of Ignition. And I'll actually be coming back to run a bit of a demo of how it all works practically at the end of the webinar today after we get through the bulk of the content. So would be great to see most, if not all of you, hang around and see what the latest features we have to offer are and how it actually works in practice. So without further ado, I'd like to introduce Beck Mihalic, who is the director at Business Depot down in Sydney and also the head of accounting here at Ignition. I've known Beck for a number of years now, and we've done quite a few webinars together. And Beck has been a practicing accountant and is now a fellow at Chartered Accountants as well for over 20 years now, and has really been at the forefront of not only adopting technology, but also new ways of billing and just running a practice that's super efficient. And Beck's here to talk to us today about billing and pricing and all of those wonderful things. So how are you, Beck? How's it down in Sydney?
I'm good, thanks, Ethan. It's a lovely day in Sydney today, which is very nice. I might have lunch outside.
Very good. We're cloudy and rainy up here in Brisbane as usual for the summer. So love to hear it. So Beck's going to talk through how to set prices that reflect true value. This is a hugely common question that we get from firms all over the place. How do I know what I'm pricing is accurate? Am I pricing too much, not enough? Oftentimes we get fairly limited feedback on our pricing, only if we get a client maybe coming across from another firm where they've got some things to say. But then we're going to talk about building a robust engagement process and how that can feed into the ongoing management of scope and understanding what you should be charging and having confidence around your fees. So Beck, I will pass it over to you to kick off with understanding billing models.
Thank you so much, Ethan, and welcome everybody again. Ethan does such a great job of introducing me to these webinars, much better than I introduced myself. We're going to go through a whole range of information around how to appropriately set your prices in your firms, manage scope, and run your engagement processes with your clients, that they're really robust and you're making sure that you're never leaving any money on the table, or as much as possible recovering every cent that you should from your clients. So understanding billing models is probably the first thing that we need to kick off here. And as professional service firms, we've always had this historic time process whereby traditionally we invoiced our clients for the time spent on the work. We're a labor-heavy service provider, so it takes our time and effort and our thought processes generally to produce work for our clients. However, over the years, with the implementation of new technological advances, we've gotten a lot better at streamlining and making things efficient. And then sometimes we don't. Sometimes we've got the wrong people on the jobs. Sometimes there is an issue, or we've made some mistakes and we've had to do rework. So when we have a look at then pricing based on time, we run into these problems where we get penalized if we're super efficient, because technically we should then be charging our clients less. Or if we've made some mistakes, which is not the client's problem or fault, or if we've had the wrong people on the jobs, then we could be looking at overcharging our clients. Now, all of this creates a misalignment with our clients, who probably prefer us to value our work based on the outcome, not how long it took us to get there. Because at the end of the day, what they're getting is a tax return or a BAS or a financial plan or whatever it is that we're providing them. They're getting that product at the end of the day, and how many hours it took us to get there is not necessarily the value that they're actually receiving. And these variances, which create a situation of write-ups and write-downs that we need to manage, means that we're already a little bit in tune with what our clients see the value of our work is. We know roughly what they want to pay for a BAS, or roughly what they want to pay for their accounts. Some of it's just based on historic charges that we've had and what everybody else is charging. But when we have a look at that and the time that we track doesn't align with what our clients' expectations are, we have this process of write-ups and write-downs, which means that we're not really, even when we do time billing, we're not really sticking to what time billing is at its core. So why should we stick with it? My suggestion is that we actually don't. And a lot of us have already moved to fixed fee. However, there is still time billing occurring in the professional services world. And if you're still doing time billing, it's definitely a time to consider moving to fixed fee. So what does this really mean? There's a misconception sometimes that fixed fee means that you need to charge your clients every single month. That's actually not true. The only thing that you need to do with fixed fee billing, which is the same with value-based pricing, is tell your clients what they're going to pay for the service before you start, and get that agreement from them before you kick off. Now, you can bill them upfront for the work and get paid before you even start. You can still bill them on completion when you hand over the deliverables, or you can have a look at all the work that you're going to do for them over a period of 12 months, divide it by 12 and charge them the same amount every month, or you can do a combination of the above. More and more, I'm finding myself and my firm doing a combination of the above based on both my clients' needs and the deliverables that we're talking about. So the next stage, when we're trying to understand what your billing models are, so that we can walk into how you should be pricing your services, is understanding then the timing of those invoices. And like I said, you can do bill on completion, you can have upfront invoicing, or you can have monthly reoccurring, whatever works for you and your client situation. The key thing here, if you're going to be able to price efficiently and make sure that you're making profit out of your work, is to ensure that that fixed fee is set and agreed upon before you start any of your work through your engagement process. So understanding now that we understand what our different billing models are, having a look at how we price for profit. And this means not just pricing based on the time that we've spent with maybe a write-up or a write-down, and not based on what you've always priced just because it is what it is, but actually looking at how much it costs you to produce a service, figuring out what kind of profit you want, and pricing your service appropriately. So there is a process that we will go through, and I'll detail these items out over the next few slides. However, you will receive the fixed fee playbook, which has been written with Ignition, and it goes through in great detail how to really dive in and pull together your appropriate pricing, how to communicate that out to your clients and how to change processes. So you will get a lot more information after the webinar. So to set your prices with confidence, there's generally 5 steps. We're going to look at how to list your services, how to determine your costs to deliver those services, how to ensure that your price that you set for them is profitable. The most important step, which is sense checking that price with the market, is if the market is lower or higher than you and you are priced inappropriately to those around you, you will suffer either losses because you're not charging your clients enough and you could charge them more, or conversely, if you're charging them too much, then you'll see yourself start to lose some of your clients potentially to your competitors. And then the last step here, we'll talk about how to create your pricing tiers, because as we all know, not all clients are the same, and not all services we provide the clients end up taking either the same amount of time, but also have the same, they don't all have the same inputs, which means that your cost to deliver a particular service, let's just say it's a BAS, to one type of client might be very different to another type of client. So we'll talk about how to create tiers to overcome that problem. So to start off with, you'll list out your services. Now, if you're already an Ignition user, that's amazing because you can grab your service library out of Ignition, export it straight out, and it's really easy to get those services. If you're new to Ignition or looking at it at the moment, getting out your list of services, ideally you've already got that in whatever accounting software you're using. If you're listing out, here's your invoice for your BAS, getting those details out of your ledger. Alternatively, you might just have to spend a little bit of time to think about all the work, all the different kind of work that your team performs for your clients and list those items out. Once we've got our list of services, then we can have a look at what are our expenses to produce this work. We've got 3 buckets: fixed direct costs, variable direct costs, and overhead costs. And as accountants, we're very familiar with these terms. However, we don't generally look at it very much as accountants when we're looking at our own items. So our fixed direct costs are pretty limited usually when we're talking about delivering accounting services for our clients. Generally, it'll be our client software subscription. So that is the software that we use for our clients, or that we on-sell to our clients, not necessarily your practice management software, which is more of an overhead. And then any specific client disbursements. For example, if you're setting up entities for your clients or you're purchasing other items on behalf of them, those client disbursements will be part of that service package's fixed direct costs. Our variable direct costs then are the most common cost and what is the most expensive part of producing this work for our clients, which are our production staff costs. So that is your team who are producing the work and what they actually cost you. So this is not the hourly rate. This is not charging out a senior, whatever it is, $300, $350 an hour. This is what you pay them, including on costs. So we're talking about the actual cost of delivery to you, and that average costs that you will incur for the service that we're looking at. And then we have our overhead costs. So that's everything else. So our admin staff, our practice management software, any office equipment, rent, association fees, all of those other items that we have, they sit in our overhead costs, but we still need to find a way to attribute those costs to the cost of delivering our services for our clients. Now, that last process of attributing costs for overhead is a slightly complicated process, which I don't have time to go through today. However, when you do get the fixed fee playbook, there are very great work examples through that process where you'll be able to calculate it out in great detail. Let's say we've gone through that process and we have determined that our cost to produce a service, let's say this is annual accounts for a small entity, is $2,000. So we probably have very limited fixed costs in that regards as far as client disbursements are concerned. The bulk of this is going to be the time that it takes you and the cost of paying your staff. And let's say that then we've also got an allocation of overhead expenses based on time or your labor costs allocated to this job. And we've determined that it's going to cost us about $2,000 to prepare this set of accounts. And let's say that we've also determined that as across the board, we would like a 20% net profit. Then very simply, to calculate the price of that service is $2,500. Now, I know that seemed like a very, very simple process. And once you go through this a couple of times, even going through the detailed instructions that you will receive later, it is a relatively simple process. It's just maths, which we're all hopefully very good at doing. So now we've got this price. This is the key part. This is the part where I think a lot of us don't do a very good job of, because a lot of the information in the environment that we operate in is not available. I don't specifically know what the service library is of the accountant who works next door to me and how much they're charging for their services, unless, like Ethan mentioned, I managed to win one of their clients, go through their ledger and have a look at what they've paid for work previously. However, an important part of sense checking your price needs to be your competitive analysis. So you need to identify where your prices stand relative to your competitors to make sure that you have that appropriate marketing position. This doesn't mean that you need to be cheaper than everybody, and it also doesn't mean that you need to be more expensive. But you need to identify where you sit compared to other people and whether or not that is appropriate to what you want to be. If you want to be the cheaper priced firm that is interested in saving your clients some money with accounting fees, then you would be looking at setting your prices a little bit lower than everybody else. However, if you're out there trying to offer a premium service, then you would ideally want to be positioning your fees at a higher level than your competitors. You then need to align this with your customer expectations, but only to an extent, because we know some of our customer expectations can be completely ridiculous. However, if you can align your prices generally with what they expect, and if you are going to offer a premium service at a higher price, you need to ensure that that higher price is justified and that you are charging the right amount for the right quality of work. Having a look at market trends and adjustments is also important. So staying relevant by adjusting your prices, market price to fluctuations and economic conditions. Make sure you're doing those quick little CPI increases every year. Everybody else does. It's absolutely appropriate for you as the accountant to be doing these things as well. And then customer retention and attraction, that becomes very important with your pricing as well, particularly when we talk about things like discounting. Are you looking to grow your firm quite rapidly? And are you looking to do that by attracting lots of new clients? Will you give them discounts to do that? Does your profit goal allow you to then reduce your price a little bit, maybe for a first year discount? Or are you looking to retain your clients? Are your prices appropriate to retain your clients? How far up can you put those prices without losing them? These are all items that you need to go through to assess your prices after you've done your profitability exercise to make sure that they still smell right effectively. Now, luckily for us, Ignition now has some amazing new tools that allow us to be able to sense check our prices against the market. Ignition's new Price Insights, which is a fantastic new feature inside the software, will give you tailored AI pricing suggestions for each service that you put into your service library and then use inside of an engagement. You're able to very quickly see where your price sits for that service compared to your competitors, and it will look at your more local competitors to you and give you some parameters around who it's comparing you to. So you won't be compared to a firm on the other side of the globe or a firm on the other side of the country. It'll be your local competition, and it will be based on the inputs you put in there. So for example, if you wanted to have a higher premium service, when you ask Ignition to check the price, you let it know that I'm looking to actually position this service as a premium service. It will then consider that in the results and explain to you why it has given you these results. So what you will receive is a lovely little graph like the one that's on the screen, which will show you the high end and low end of what the relevant competitors around you are charging for that same service and where your price sits along with the pricing suggestion. Now, you don't need to take this. You can continue on if you think that your price is appropriate, but it is a good tool to help you understand, particularly if you've never priced this kind of service before. And I find it very, very handy for pricing ad hoc advisory services, which might be a little bit outside the box that I've never necessarily done on bulk before, and I'm not really sure how palatable certain prices will be to clients. Now, in addition to having that great AI tool, Ignition has also run a tax and compliance pricing benchmark survey over the last couple of years. And the most recent one, which was just completed a couple of months ago, 2025, goes into detail around what accountants are charging for the standard services that we offer as accountants, including company accounts, BASs, ASIC services, and a range of other items. What are they charging in different areas, and what are their plans for increasing their prices this financial year? It's very, very handy as well for you to benchmark your own pricing against, and that will be coming to your inbox at the end of this webinar. That survey was based on 160 accounting firms that use Ignition, is based on data, real data that they have provided. So there's quite a good range in there for you to be able to understand what's going on. Some of the highlights from the report show that across the board, 81% of firms plan to raise fees across all services in the current financial year. So if this is something that you're looking to do, absolutely the right time to do it, because we're all doing it. If it's something you haven't done for a while, I strongly suggest having a look through that fixed fee pricing book that you will receive and contacting Ignition for some help around addressing your pricing and how you can get better profitability out of all the services that you provide. So the last step after we've gone through this process of determining the cost to deliver our services, what our profit percentage needs to look like, which then will result in our price. We've sense checked that against the market. Now we have to create our tiered pricing. Now this exists and is probably the most important step, because we know that our clients are all different. So the approach that I have taken for many years now is a tiered pricing system. And the process involves two major steps. The first one, which is why you need to know what all of your services are, is listing out all the services that we offer for our clients. And we need to categorize our clients. So think about your clients in this bucket of small, medium, and large. And think about some triggers or some identifiers of what makes a client small, what makes them medium, what makes them large. Some of those things could be how many bank accounts they have, how many finance leases they have, are they an employer, do they have many employees, and just those items that create us more work or require further reconciliation or complicate matters for the accounts that you're doing for your clients. Using these items, you can then categorize your clients. And the way that we do this, there's an example on the screen at the moment. We have about 15 items listed out, and when a client hits 2 or 3 of those categories, we move them up a pricing tier. So they're no longer a small small client, they're now a medium client or a large client. We then take those small, medium, and large client categories and have broken down and had a look at that costing exercise for each category of client. Because when we're looking at our cost to deliver a service, particularly the variable costs that we discussed, that's based on the time and the cost of the labor in your firm. That is going to change based on a simple job for a small client versus a more complicated job for a large client. So that cost base for you will increase, which then means that the price you need to charge your clients increases. And so that you don't have to calculate this out every single time when you move towards fixed fee billing, it's much easier to have a pricing matrix there to help your team cost out a job very, very simply without needing to wait until the end and see how much time it took. Now, don't forget in this process that if you do have an extra large client or somebody who sits out of the box, you can always edit these on a case-by-case basis if needed to. However, for consistency, I do recommend trying to stick to your suggested pricing as much as possible. So I think we've kind of done pricing, gone through quite a bit there. And again, as I've mentioned, you will get a whole range of resources in relation to your pricing and how to go about doing that in an efficient way and how Ignition can help you with some great AI tools. Next, I'm going to talk a little bit about your engagement process, because it's one thing to have your services and great pricing. What you really, really need is your clients to agree to that. And the best place to do that is through your robust engagement process. And not only is it great to ensure that your clients are on board with what you're going to price your services at and ensure that you get paid, it's also keeping us compliant with our rules. So as accountants and bookkeepers, our obligations vary depending on our registrations. So if you're an accountant, we have to comply with APS 305 terms of engagement. Now, this is not a suggestion. We have to comply with APS 305. And there are certain parts of that standard, which are highlighted in bold, that we must comply with. So all CAs, CPAs, IPAs are required to do that. Then if you're a tax agent or a BAS agent, the rules that govern or the suggestions around what needs to be included in our engagement letters are all contained in Tax Practitioner Board Practice Note 3/2019. Now, this is a very easy to read practice note and is very specific around how often we need to send out our engagements, who we need to engage, and what those engagements need to include. And once reading this, it's actually quite simple to implement that into your practice. If you have specific engagements as well, there's a range of other standards that you need to comply with, including if you have audit, valuation, or valuation services. If you're providing taxation services as a tax agent, not only do you need to comply with APS 305, you also need to comply with APS 220 taxation services, which talks about the reoccurrence of your engagement obligations and how you need to comply with 305. So if we have a look now at then what this means for our industry, CANZ produce every year their quality review results. And the most recent results for 30 June 2025 show that APS 305 terms of engagement is the third item on their list of things that accountants are not complying with. So as they're going through their quality review process, they're absolutely noting that this is a requirement. We should be documenting our client relationship in an engagement letter, that engagement terms are not being documented on all engagements, or they are incomplete. This is one of the top 5 problems that CANZ are finding with their member firms, and that is a common finding across CPA and IPA as well. They don't have this report, but I have had them on webinars where they've talked about this being a major problem in the industry. So to stay compliant, we need to look at engagement letters. But instead of looking at engagement letters as a administration burden, we can have a look at them as a tool to really strengthen our client relationships and protect the profit in our practice. And using fantastic tools like Ignition, this process is actually incredibly seamless and very, very easy to run, even re-engaging your clients on an annual basis. So your engagement letter should contain all the services that you're going to provide and the capacity in which they're being provided. Are you doing it as an auditor, as an accountant, as a tax agent, as a BAS agent? How often you're going to provide those services? So is it a monthly BAS? Is it a quarterly BAS? Who is responsible for what and when? That includes your client's responsibilities. What are they responsible to provide to you so that the fee that you're going to charge them is appropriate? How much are you going to charge them should be included in your engagement letter as well. And also a recommendation to note in there, how will out of scope work be handled? And lastly, very importantly, what is not included? What are you absolutely not going to do? If you're an accountant, perhaps one of those items you're not going to do is an audit of the accounts. If you're a bookkeeper and you're providing payroll services, potentially an exclusion is the provision of HR services, because that needs to be given by an industrial relations lawyer. To help you figure out exactly what you need to do with your client engagement letters, Ignition also has another fantastic piece of content called Taking Control of Client Relationships with Engagement Letters. In here is some great detail around what you need to comply with to ensure that you have no problems with your client relationships, and how you can easily use Ignition to make sure that this is a compliance burden that you're not going to have if you ever are the subject of a quality review, or if you ever have a client make a complaint. And now with changes to the TASA rules, it's much easier for our clients to complain about us. So if we have a look at where Ignition actually fits in this process, it supports our quality and compliance by automating our engagements and onboarding. You can create your engagement letter in there with a pre-populated engagement letter from whoever your membership body is. So if you're a CA, CPA, IPA, they all exist. We have ICB tax engagement letters in there as well. It aligns then with our quality management system, and it keeps us compliant by auto-generating APS 305 compliant engagement letters. It manages those acceptance and continuance workflows, which is an important part of a quality management system. It ensures that we are disclosing our fee, scope, and registration status, which is some of the new rules under the TASA Code of Conduct change. We have to tell our clients, and we have to have evidence that we've told our clients what our registration status is, how they can make complaints, and any other relevant information, and helps us track our re-engagement annually for monitoring. And that annual re-engagement process is one of the items noted under TPB Practice Note 3/2019, and it reduces risk of missing those key QMS steps on onboarding, because we'll gather all of our client details and get them set up seamlessly in our systems. So it means that workflow process and our onboarding process for our clients is seamless right when we get them and every year when we keep them. Moving on to the next topic, which is scope creep. This is the next big thing. Once we've gone through and we've figured out all of our pricing, we know how much we're going to charge for all of our services. We've got our tiered pricing sorted. We've sent out our engagement letters. Our clients have signed them. We are compliant. We are getting paid. Great. Then they ring us and they say, hey, I need a cash flow forecast so that I can go for a loan. Or I'm looking to put on some more staff members. Can you do some what if scenarios for me to see whether or not I can afford that? Or I've just received a letter from the ATO and I've got to change from quarterly BAS to monthly BAS. Please help me. Any of these questions or these items that pop up change our engagement with our clients or are outside of scope, because they're items we did not know about when we sent them the original engagement, and they're items that we didn't know about when we re-engaged them at the end of the financial year. Now, Ignition ran a survey a few years ago in 2022 called the State of Client Engagements, and they found through this, gathering data from accountants and bookkeepers, that the average amount that accounting and bookkeeping firms are losing out on year on year is over $100,000 in unrecovered out-of-scope work. So that means all those little phone calls that we have from our clients where we just jump in and do the work, and then because we didn't talk about the fee and we've moved to fixed fee, we feel a bit weird about charging them. If we're on a monthly reoccurring, how does that fit in? Do they think it's included because we haven't been clear in our engagement around our terms of service, so they're not really sure what the $1,000 a month they're paying for actually covers? All of these items create this situation where we're missing out on billing our clients and we're writing off work and we're chasing them unsuccessfully for payments for items that they didn't necessarily realize they were going to get charged for or didn't realize were outside of scope. So to manage that, we need to get much better at managing our scope process. And this is where that robust engagement is so important. If you've sent out a really good engagement letter, it specifies exactly what services you're going to offer and when, and how much each of those services will cost you. So then if you have a client ring up with an item, you can tell them quite confidently, this is outside of scope, it's not in the agreement that we have, you're going to get another invoice. And particularly if it is a project item or a once-off, or maybe there's a change of structure, or potentially it's additional ongoing work, you probably need to send them a new client proposal. And so you don't have to go through that administration burden of doing it in a very clunky manual way. It's very easy using Ignition to knock up a new client proposal by effectively copying the one you have and adding a couple of services in. Alternatively, if it's a small ad hoc item, if it's something that's not going to cost a lot, but you do want to make sure that your clients know that anything outside of the normal course of events will incur an extra bill, you can get pre-authorization for small ad hoc items in your engagement letter. Ignition has a fantastic process for putting that in there so that your clients sign off it at the beginning, which means that if you hit a month where you've done something extra for them that wasn't included, raising an instant bill that they will not argue with is actually incredibly seamless and ensures that you get paid for all the work that you do, minimizing the amount of money and time that you're writing off. However, then what if something on an ongoing basis changes, but it's not worthwhile sending out a full big engagement? Say, for example, when a software provider changes their prices like they like to do all the time, you can very simply in Ignition edit that service and put in the new price. So if a subscription went from $50 to $55, putting in that new price and making sure that you don't miss a beat is incredibly easy. You do need to ensure, however, that your engagement allows you to do this and that you've brought to your client's attention that price is going to change on an ongoing basis. Again, the communication around that is managed seamlessly inside of Ignition. So what are some of the barriers that we might have when we're talking to our clients around fixed fees, engagements, and scope? Some of those items might include, how do I know whether or not I'm paying a good price for this item because you've given it to me up front? So what if it takes you a short period of time than what you're estimating, particularly if you're working with a client who's used to receiving invoices on a time basis. The conversation then you need to have with your clients is all around that you are providing them with that service, with a product effectively. It is not the time that they are paying for, it is the result that they are paying for. Internally, you might face some barriers around the time that there will need to be invested in getting engagements working. Again, if you're using a product like Ignition, the process of engaging your clients will be seamless. It will work straight inside with your client base, pre-populated straight into Ignition. All of your pricing, your service library will be there. It means that in one place, everybody in your team can see all of the services that you are providing those clients, what they have requested, what they have agreed upon, and what you said you're going to charge. There should be absolutely no problems. So some of the other problems that we might face, my clients won't like this change. It's just too different. Clarity and transparency with your clients, it's always a winner. So making that change with your clients and letting them know this is the fee that we're going to charge. You're not going to get any hidden bills. They're not going to spring out and bite you at any time. We'll make that conversation with your clients much easier on an ongoing basis. What if you quote the wrong amount? Now, this comes back down to scope creep. So I spoke about scope creep in regards to if an item comes up that was unexpected. However, what if you price your clients and you price them as a small client instead of a medium client, or a medium client instead of a large client, and it's taking you a lot longer to do the work because it's a lot more complicated than you originally anticipated? Well, the first big step to actually overcoming this barrier is ensuring that you do really good due diligence up front. If that is not an option for you, particularly with a new client, if you can't get access to the right records that you need to know exactly whether or not they're a small or medium client, ensure your engagement letter has the opportunity for you in there to, if you discover something about the client midway through the job, you have the ability to stop work and reprice at that point in time and give them a heads up. Don't wait till the work is finished. Ensure that you are tracking the progress through all of your jobs and stop the minute that you know you will not be able to move forward with that work. And then it's too hard to make changes to the engagement proposal or quote if I get it wrong. Well, I've just mentioned all the ways Ignition can make that really easy for you. And Ethan, who will be joining us shortly, will be able to show you exactly how that works. So it's definitely not too difficult, and using templates and technology, those changes can be made in minutes and get signed off, which is far less time than we will spend trying to chase our clients for non-payment down the track. So what are the results if we go through this process? And whilst it might be a little bit tricky the first year, this just rolls through like butter from year to year. You'll have more cash and more profit. You'll understand what your costs are for delivery, which makes you a better negotiator, or at least stronger when talking about your prices. When you know fully how much it costs you to deliver a service, you will not be bargained with to drop your price below that service cost. It will see you increase your average recovery rate in your firm if you've got the right people working on the right jobs. You will have far better team morale. Nobody in the firm likes to know that they are working on a job where you're always having write-offs, where the client doesn't appreciate the invoices, or that there's constant fee disputes. It does not make any of your team members feel happy. They will like the better process and the clarity that they can provide their clients, even at the most junior levels in your team. Better client relationships, transparency always wins. The more engagements you send to your clients, the more opportunities you have to talk to your clients about the value you provide and the extra services that you can provide them as well down the track. And it will mean that you're working with the right clients, because the wrong clients will not pay your new prices and will not sign your engagements. And this whole entire process will de-risk your business. You'll be able to manage your scope appropriately, get paid for all the great work that you do, make sure that you're making profits on your work, and stay compliant with the rules that we have around engagement and some of the new TASA changes as well, which as a whole, that's what we're here to do, isn't it? Stay compliant. Now, before I introduce Ethan Cooney back into the webinar to run us through a demonstration of some of the things I've spoken about, love to invite you all to another webinar next week where we've got a stellar panel joining us on the 25th of November. Katie McCool, Ben Walker, and Ali Garrett are all leaders in our industry, and they're going to talk through what they will be doing this year to avoid the cash flow crunch when hopefully we all shut our doors for a couple of weeks and get a little bit of a break. Hello, Ethan.
Hey, Beck. Great presentation. Are you out of breath yet?
I am so out of breath.
Awesome. No, appreciate that, and some really great insights there around the approach we can take to pricing in the new year. So we'd love to hear people's feedback. Please jump in the chat and let us know what you think. Oh, Beck's just left the screen. That's okay. I want to say thanks to Beck for preparing that presentation for us. Really, really, really useful. Excellent. I'm going to take you through a bit of a practical overview of Ignition now and just look at a few things and primarily focus on this notion of pricing. So I'll firstly just start with what a proposal looks like, just for those of you who have never seen Ignition in action before. And then I'm going to talk about the ongoing management of scope to Jessica's question in the chat to make sure that we demonstrate how that looks within the app. And then I'll talk about the price insights feature that we've recently launched that Beck was also referring to. So Ignition's proposal, it blends together the engagement letter, the fee quote, and also the proposal itself. So what you're seeing on screen is what you can send to a client through the platform. This takes 2 minutes to put together. It's all templated. It's all prefab. It's pre-created. You go through the process of setting minimum fees, setting explanation for services, and so on. And it looks really engaging. It's really simple for your clients to click through it, see the scope of work and the inclusions throughout the year. As Beck said, really clearly, articulate that anything beyond the scope in this proposal is charged at an additional rate. And also then present the ability for clients to select add-on services. So these are optional services that clients can select or not select depending on if they want to take them up. And that might be services you're wanting to position that you haven't sold actively before, like advisory services or succession planning or tax planning or what have you. You can also actually have a packaged approach with Ignition. So you can present up to 3 tiers and you are able to position this to your clients and basically put a small, medium or large package in front of them and say, look, maybe here's the level that you've been at year to date. We've been offering these services from this additional package. If you're wanting to retain those services for this year, you will need to move up to this middle package. Or if it's for a new client, hey, this is what we could offer you. These are all the things we could do, the deluxe meal, and then let the clients kind of self-select into the package that makes most sense for them. The feedback that we get from firms using this is that often they are surprised at the level at which their clients come in at. It's often higher than what they initially expected. And I think it's something like 85 to 90% of the proposals accepted are the ones that are being recommended. You can actually add a little recommended banner here to a package, and 9 times out of 10, that is the one that's being accepted by the clients. So it just gives you more leverage in terms of presenting your fees. Here you can either present fixed fee, or if you are wanting to still time and cost quote for certain services, you can absolutely do that. In this instance, I've got a combination of both. So my annual compliance that I'm charging monthly, a monthly installment for, and then I've got out of scope work here that's charged at an hourly rate of $165 an hour. I've then got my quarterly and quarterly compliance there, and my software subscriptions, as Beck referred to as well, for a total engagement of just under $8,000. So you can see just how clear it is for the clients. You can choose how much detail to provide here or how summarized you want it to be. What's unique then about Ignition is the ability to actually capture payment details right then and there. in the proposal. So card, direct debit details, you can actually make this a requirement, which means that you will never, ever, 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 ever have to chase an invoice again or even raise an invoice, because Ignition does the creation of those invoices. It marks the invoice as paid once the payment hits the account, and it will automatically go and collect those fees. So the vast majority of firms who are running Ignition across their client base, never chasing an invoice, never manually doing invoicing, never carrying debtors, never having to do write-offs, because it's collected so quickly and there's a process for that to work seamlessly. Finally, to Beck's point around compliance, this is a big one as well with the TASA changes, and particularly Section 45 around informing clients and disclosure requirements and so on. All of that can be easily ticked within the Ignition platform by using a template which has the up-to-date terms. You can also restrict access to the template, so you can set that as the expectation for all your staff that they use the most up-to-date, accurate template, and you can trust that Ignition will go in and format it for them. So all the client names, the length of the agreement, the pricing of the services, all the relevant terms will be added to it automatically without you having to go in and manually edit it every time. Lots of firms I speak with are still doing this within Word documents, within PDFs for every client, at least once a year, and that takes ages. We don't have time for that. Nobody has time for that. So you can do that through Ignition really simply, just using the templates that we provide. And part of the setup service that we provide is also formatting your existing template into Ignition so that you can use that in this format as well. Clients tick the box and sign. Takes 10 seconds to go through that. Hopefully a little bit longer because they're actually reading your proposal. But that is the process there on the client side. On the firm side, I just want to show you a couple of things here. So I mentioned we have templates available. You can see a library here that I'm just scrolling down on the left for various different services, group engagements, FBT, individual tax returns, compliance for companies, partnerships, trusts, and SMSFs. We've got a whole, even STPs and TPAR authorities. We've got a whole host of templates there that you can access that are tailored and customized for you. And the TLDR here is that you can basically use these, go in, change the wording slightly, update the fees that you'd prefer to charge, and then you've got a completely revised service library ready to go. So if you've sat through the webinar today and thought, I need to revisit my pricing, this is a great way to start. It's a great way to put structure around the process for yourselves. So what I'm going to do is just show you an example, and this is a bit of a funny example here. What I might do is actually load a proposal template, because this must be an A-grade client who's paying us almost $73,000 a year. That's because I've added a whole bunch of different services in there while I've been demoing it. So I'm going to reload one of these other templates, and in the meantime, you can see how easy it is to use those templates. So we'll crack on here in a minute once this creates and populates. And all I need to do then is basically select the client from Xero or from your other ledger that you're engaging, go through into my services, and then finalize the fee for each of those services here. So what I'm going to do is demonstrate now the new AI-powered price insights piece that Beck referred to. So here I've got my monthly service here for my annual financial report and return at $250 a month. I can click Analyze Price here. And what Ignition will then ask me to do is provide some additional context. So this is a VIP A-grade client, positioning services, if I can spell, positioning services as premium in Sydney CBD area. So I can feed it some additional context, and Ignition's going to go away, run an AI analysis over the hundreds of thousands of engagements that sit underneath the platform with anonymized data, and present to you a fee range that would be acceptable for that service. So I can do different things, like if I'm regional, if I'm targeting, to Beck's point, if I'm doing introductory discounts, if I'm trying to attract more new clients because I'm just starting the business, whatever. It gives me the ability to add that context and then present an estimated fee range as well. So you can see here what it's done. It's actually told me that I'm on the low end. If I'm charging or positioning my services as premium, servicing VIP A-grade clients, larger clients within Sydney CBD, I probably should be charging closer to $400 a month for that service, and it gives me some reasoning and context behind that as well. So this is a new feature that we just have launched very recently, and I feel like it's of huge value and benefit just in giving us confidence of the price that we're putting in front of our clients. Like, how many times have you arrived at a price or a quote and then second guessed yourself? Maybe it is too much. I'll just lower it to something that I know they'll expect, and maybe we've left money on the table. Or maybe the scope does change quickly and we've underquoted, and it results in like a bit of an awkward conversation with the client because you've now got to reprice them. We're just giving you confidence with some data backing that what you're charging is correct. And of course, you can choose to use the suggested price, or you can refine it, or you can set your own price. So totally up to you still. And of course, all internal data for you there as well. Finally, the last feature I wanted to show you in Ignition before closing out today in 3 minutes time is the renewals feature. So this is where you are able to, on an ongoing basis, do fee reviews and increase your fees commensurate with CPI. So I'm going into my proposals here, looking at my accepted proposals, and then selecting either one or multiple proposals. I can do filters, like filter all of my individual returns, filter all my A-grade clients, filter all my clients by partner, then click renew. And what Ignition will do is actually go in and allow me to renew my proposals in bulk. So I might want to apply a 5% just basic price increase across all engagements, rounding fees to the nearest $5. I could do that and go through then and refine the fees by service if some need to go up or down depending on how I've charged them. Click create proposals, and Ignition in the background will go and update and create renewal agreements for all of those 4 proposals. Give me some confetti, which is always very satisfying to me at least, and then go in and see my draft proposals there, ready to review, ready to send out, ready to get in front of my clients. Like a really easy way of getting those annual engagement letters signed, making sure that you're staying on top of scope management as well. One final thing to answer Jessica's original question within the chat is just how do you go about managing changes to scope or billing ad hoc work? Well, here I've got a client. They've signed one agreement with me in the past for tax planning. I've also got a couple of other proposals that I've created for them. I've got a series of services that they're currently engaged for. But what if they call up and they want a business valuation or a forecast? They're going for finance. They want to buy a new Range Rover or something. We need to bill them for that piece of work. I can come in here and very quickly go through. I might find the forecast service here, which is budgeting and cash flow forecasting. This has given me a predetermined service description, which is a 12-month forecast broken down month by month. $150 is way too cheap for that. So I'm going to charge them $1,500 for it just because I can. And then I can go through and nominate the payment details they're going to pay with. So, hey, Bob, are you happy for me to use your Amex on file? Absolutely. Then click next, and I can finalize this with an email to the client, which is automated as well. I could customize it if I want to, confirmation of forecast for finance approval, whatever it is, add an internal note, click create, and Ignition's going to notify the client, collect the fees on the nominated date, raise the invoice, mark that invoice as paid, all automatically. So my recoverability is just right there for that work. So hopefully that gives you a good indication of how we manage ad hoc work. Changes to scope are even easier. If there is a monthly fee or a quarterly fee and you need to update that fee schedule, say we're doing a quarterly BAS, it needs to go from 350 to 500 a quarter, I could go through and you can see that schedule change going forward is going to move to 500 a quarter. Click save and we're, again, ready to rock. So very, very easy to stay on top of scope, make sure that your billing and your engagements are up to scratch. Andrea, great question in the chat in terms of AI work for bookkeeping. That is a great example of where you can prompt it with context. So you could put in the volume of transactions, you can add as much context as you like to that prompt to help refine the scope of that AI price recommendation. I'd encourage you to go in and test it out. We actually have 3 price insights that are available as free within any Ignition account, including a trial. So I'd encourage you to go and check those out, have a play with the prompts. Excellent. I'm going to close things out now. Just in summary, we actually have a bit of an offer for those who are not yet using the platform. I know we're quickly approaching the holiday season, and you might be thinking this is great, it's a next year thing for sure, and then next year will roll around and we'll get very busy very quickly, I'm sure. So we've got an offer at the moment where you can pay for 1 month, November, and get 2 months free, December and January, and so you're ready to get going with this process for the new year. This is an excellent offer, gives you time, gives you space to get set up. Our team will help create or facilitate the creation of proposals in the background, help format your engagement letter, just help you get really ready to get started in the new year, rather than leaving it and perhaps getting started in February or March. You could actually be ready to rock in January. And so it's a pay for 1 month, get 2 free. If you're interested in that offer, do respond on the poll and let us know. We can give you a call or send you some more information on how to claim that offer. Or if you'd like us to just send you the link to a trial, we can absolutely do that as well. You can sign up with no credit card or anything. You can go in and play with the whole product. You get access to payments within your trial as well, and you get access to using those price insights. So if that's at all of interest, please do make use of that. Let us know, and we'll be able to send through information regarding the trial when we finish the webinar today. Otherwise, I wanted to say thank you to everyone who's joined. Thanks, Beck. Thanks to all of you for taking the time out of your no doubt busy week with BAS deadlines and things happening at the moment. So really appreciate your time, and hope to see you in another webinar soon. If not, enjoy your holidays, and we'll see you in the new year. Thanks very much.